All right, good evening, everybody. Um, we'll start out by looking at what missed, or
Good
what
evening, bro.
our original plays. Uh, that's my kid in the background. Um, we called out long on ABBV, and that was for Tuesday the 21st. And we just peaked above our entry and then rejected and got slapped. So this was a miss. I know what was it, AI. I gave levels on this. Um, this was, uh, where was it? Actually, I don't remember. The guy sent me like a really good screenshot. Let me see if I can find it.
Your mic is cutting out, buddy.
Yeah, I don't know what to do about that. It's not on YouTube. So this was the call entry. So break above this, take your first trim here, and close your calls here. Levels are pretty accurate, so this was a win. It wasn't one that I marked down on my list, though. We'd also called out Disney, which did not trigger. Uh, it's still a play. We just haven't gotten there yet. And then also GME, same thing. Still a play, just haven't got there yet. We're looking for calls over 2360. First trim 2550. Close the calls at 2762. Um, and just for reference, I'm not going to be taking requests tonight. What are you showing me?
I labeled them.
Okay, cool. Um, I will go over snow because somebody asked last time and I had to dip quickly. But I'm going to just basically run through the plays that I found really quickly, and then I'm going to go take my wife out for a date. So, let's see. Cat. I'm interested in puts on cat. Break below 351.40. I'll take puts. First trim 348.69. I will close my full position at 345.55. I'm expecting price to come to 338.91. This is going to be a swing trade, and I would take at least, if you're looking for the full move, at least 4 days out. If you're just looking for the first trim, you can take just a day trade or a couple of days out. Next one is going to be Google. Um, I left these original levels on here because I know we had covered, I believe it was on Thursday, that if we retested this level 175.03, which we did, you could enter long, and my price target would be 176.42, which was hit. Um, as you can see by this arrow, I didn't remove anything, but I'm going to take these off now. So now, really, I would like to see price come below 178, like pre-market, and then break back above. And when we cross through 178, I would be long or take calls, and I would close them at 179.90. This will be a day trade, and if we just open above 178, anywhere close to it, like 178.10, 178.30, I would just hop in calls and target 179.90. If we open, like far above it, I wouldn't take it, but if we're close to 178 at the open, I would just grab them. Is anybody listening to me on YouTube? Because it sounds like maybe they don't have sound. I don't know.
I can check it for you if you want.
I would appreciate that.
Yeah, I'll go.
Okay, they're hearing me. All right, cool. Final one that I'm looking at is Netflix.
Here's your lunch pail.
And if you're with us from the recent start of looking at options, we just nailed this one last time. We took calls over 580, and our ultimate price target was 613, and we did it in 3 days. Right now, we're about to run again. So over 643, I would take calls. Your first trim is going to be at 646. Somebody's mic, please, Tari. And then the best, like the safest place to close your calls is going to be at 649 and 25 cents. Thanks, guys. I appreciate it. And then if you want to hold a little bit longer, 651 is probably a good target. We're actually probably going to make like a new higher high here. Actually, let me see where I think it's going to go. Um, 59 is doable. So we'll just mark that. So that's the only one that I had. I know this is short, but somebody wanted me to look at snow, and I'll just do it live really quick. Somebody asked last time, and I didn't have time to do it. It sounds robot-y. I gotta figure out what's going on with my my sound. Actually, I bought like I don't know what to call it. A box that has like noise cancellation and all that crap. I'll be hooking that up eventually. Snow's about to go. It just had earnings, right? Let's see. Pretty flat. It's about to run though, it looks like. Kind of confused here. Where are we at? 170. Okay. Oh, this is because of the earnings. Dude, there's no point in looking at this right now. We're at 170. This is really hard to look at with earnings like having just happened, but if this is where price is 170-ish, we need to clear this. Clear 171, and we're going to here-ish. I would give it a few weeks, but break this. We'll call it 171.50.
Rockets, you usually look at those on dailies? Or do you go 4 hours as well?
No, really just daily. I'm not, I'm looking at Elliott waves,
Oh, okay.
and then I'm looking at, shit. Then I'm looking at the clouds, and then I'm looking at the daily. So I don't need more confluence than
Okay.
that. That would be my, that would be how I trade snow. AMD, there's literally no point in looking at John Doe because it's going to be following NVIDIA. And if you didn't have calls, I mean, we were talking about NVIDIA for like a week now, or a week or so, week and a half. I said it was going to 975 to 1,000 when earnings hit. And I don't know where we're at right now, but I know we're up there. Let's see. Yeah, so we're at 1,000, over 1,000. High was 1,023, and right now we're at 1,007. AMD is gonna follow, right? It probably already is. Yeah, I got a little spike after hours. Tesla. Yeah, I'll show you, John Doe. Dude, you guys are killing me. I'm like, I'm not taking requests. And everybody's requesting. The thing is I look at all of this stuff anyway, and like, I looked at Tesla. If I saw something I liked, I would have already given it to you guys. If you're desperate to trade Tesla, it needs to break 183.70, and it'll go to 190, I think. Let me see. Yeah.
We didn't hear none of that.
That's weird.
Last thing we heard was 183.
I said 183.70. More like 183.75. But yeah. Actually 183.80.
Yeah, if you were talking all the time. Nothing happened.
I don't know what to do. Like,
I'm not trying to be a pain in the ass. I'm just letting you know.
I would say then go over to YouTube because I don't have any issues there with my mic. I can see that it's cutting out in Discord, but
Okay.
yeah. Yeah, I've got to look at what is going on with my Discord that my mic is not working properly because it's like right in my face. It's obnoxious. So anyway, Tesla, this is what I would be looking at. And I would be taking a trim right here. Right about there. So that's Tesla. Yeah, I don't know why you guys want me to look at stuff that had earnings today. Like, if it had earnings today and it dumped, then it's probably going to be going back up. And if it had earnings today and it rocketed, then it's going to be coming back down. There's nothing on a technical level that I can look at, at least within a few days of earnings. Like, it's got to settle back in. This is probably going lower. Looks like it needs to go to about 1180-ish, give or take. Oh wait, it did earnings and like this is not the actual price, right? So yeah, it's going lower. So try to show you this the best that I can. We just lost every Keltner cloud, and then prices were 1087-ish. It needs to get back inside these clouds. Otherwise, you have nothing but free space for a sell-off. So I don't know what this company is or what your interest is, but this is really ugly. If they're not able to hold this, they're gonna sell off like pretty hard. Yeah, this is going to be an important level. So lose this, we've got free space down to like 940-ish. And then it's going to be super important that they hold this. And if they don't, then we have free space down to 642. Potential to bounce right around here at 785. But right now, I mean, this is like a do or die right here. They need to bounce, otherwise it's going to sell off a couple points at least. Okay. But yeah, I mean, I don't mind looking at stuff, guys, but really, like, there's nothing from a technical basis that I can look at, like, right when earnings have happened. All right, I think I've covered everybody's tickers. John Doe wanted to see my settings for visible range volume profile. So I'll just cover all of my volume profile settings. Whoa, what up? Row size 200, value area volume 68. And this is VRVP. For SVP, row size 100, value area 68. And basically every other PVP, 68, 100. And then I don't have it on here right now, but I also use the fixed range volume profile, and that would be the same. Row size 100, value area is 68. Just when I thought I was done. You guys want me to get divorced, huh? I think that's the default, John. VRVP. Yeah, I think it defaults to the right side. Yeah. You want this one, visible range volume profile. And it should default to the right side. Alright, UNG is going to sell off by the looks of things. Needs to come down to about 19. Let me look at these clouds. Yeah, 1920, and then it should get sent higher. Oh, we just looked at this, right? And we binked it. So like every level hit, right? I remember this now. Break 17.5. I said retest. I don't know if it retested, but sure did. And then go long, close here, and I said it was potentially going to 1938 or 1995. Right now, we need it to pull back to right about here. Let's see. Yeah. It is a range, so pull back to this area. Go long, take calls. And then you can target this is a good trim. This is what I would be looking for. Pull back between 1940 and 1917-ish. Take calls in this range. Your first trim is going to be 2055. Second trim will be 2090. We'll just make it 2090. And then close your position at 2147-ish. Okay. These SPY levels have been crushing. We can look at them really quick, but yeah, no problem. We had said, sorry, let me try to zoom in a little bit more. So, I don't know if it was here or here, but we were looking for a pullback to this range. We got it. This was like our ideal long, if you were watching when I covered this. And then obviously, or hopefully this is obvious, but when we have a key level that needs to be broken, bro, there we go. This is obviously like a resistance level, right? And so if we went long here or took calls here, we need to be closing when we get to here, or even potentially at the POC here. But this was hit pretty much to a T, right? Yeah, 531.52, and this is at 531.52. So I literally hit it to a T, to the penny. And then we had said if price comes up to 531.52 and rejects, you would take puts. So you could have grabbed puts here when you closed your calls. And, you know, we'd be playing them down to this single print level, 529.19. I had said break below this, retest, and take puts. I don't know how that played out here. We can look at it. Yeah, we broke below. This you wouldn't have traded. I know I said we want 3 5-minute candles below, or 3 5-minute candles above any level. So we broke below here, came back, retested. You could have got, I don't know how big of a move this is. Roughly a point, right? Yeah. And if you didn't close, you would have got stopped out. So the levels have been hitting well. Yeah. I would still be watching for a break of this 531 level. Retest, go take calls. And you want it to break, and again, you want 3 5-minute candles minimum above this level, and then retest, and you would take your calls. You could also, if we come back up and just tap it and reject, you could take puts from there. And again, target 529, 20-ish, give or take. Okay? I know, Michael. I'm glad we're buddies now. Oh my gosh. John wants me to teach stuff that Shorty teaches like every weekend on Discord. I mean, on the YouTube lives. Let's see. You go to 30 minutes. You go to regular trading hours. This is going to be a hot mess because of all these drawings. Maybe I'll just, no. Let me just switch to NQ. Yeah. It's TPO. And so where is it? It's broken. Oh, look at the single prints tap here. It's beautiful. Yeah, no, everybody's trying to get me divorced. I already know. Dude, why is this not loading? Regular trading hours. Thank you. Am I missing something? Oh, there we go. I just need to zoom in like massively. Okay. So it's basically the market broken down into 30-minute blocks of time, and each block of time has a letter associated to it. So the first 30 minutes is going to be the A period, second 30 minutes is going to be the B period, then we go to C, D, E, F, G, H, you guys know the alphabet. And then single prints is going to be anywhere where we had price only in that area for 30 minutes or less. So for example, today we had no single prints on NQ. However, yesterday we had single prints between 693 and the low, which is 678. The day before that, we had single prints, from 93 all the way down to 618. So it's just basically anywhere where price didn't stay there for more than 30 minutes. And that can happen anywhere, so like here during the C period, we had single prints right in the middle of the, the range for the day. So single prints right in the middle, single prints at the bottom, single print at the top, single prints at the bottom, single prints at the bottom. So it can happen anywhere, and that's what single prints are. There's videos on this on my YouTube. You just look for either the lives or the videos that are just recorded that say TPO or time price opportunity. I'm not sure exactly what they're named, but it's TPO or time price opportunity. We'll explain how all of this works. But it's good to have the single prints marked. I mean, as you can see, like, this was the single prints on NQ, and we came right down in between them and then bounced. Here we had single prints from the previous day, and we came down to that range and bounced. So it's always good to be aware of them. Okay. Robinhood. You guys, you guys have to do the. So, like, I'm going to try to answer your question, but you guys need to watch the videos, or really, ultimately, you need to read the books. And I'll say it again. If you read, what am I doing? If you read the 3 books I have pinned, then I'll teach you all this stuff. But basically, so we have volume, right? Down here at the bottom of my chart, this is volume for each candlestick, right? Volume profile is volume at price. So this bottom part is volume at time. This is volume at price. And so these large volume nodes will act as support and resistance. And then the areas where it's skinny, price will just fly through. So it's what's nice about volume profile is its objective support and resistance. Whereas a lot of people just draw support and resistance on their chart, and they're guessing levels because they don't have, like if you take, sorry, I'm having a total brain fart. If you take 10 people and you say, look at SPY and draw support and resistance, for the last week, and then all of you collaborate afterwards and share your charts, I guarantee you nobody will have the same levels, because all of that support and resistance is subjective, and people are looking at different things, and nobody's going to have the same levels. If you take volume profile, which is completely objective, and you tell 10 people that have, oh wait, this is wrong, that have the correct levels, or correct settings on their chart, correct time frame, and you tell those 10 people using volume profile to find value area high, value area low, and POC, they're all going to have the same exact levels, because it's completely objective and not subjective. And so, I've said this before, I'll say it again. Hey, what's up, Scott Dog? So, like, when you guys tune into my YouTube, or when you even listen to me teaching or going over whatever, a lot of the times the person talking on my YouTube is Shorty, and Shorty is like a legit market maker. And so when you have a market maker teaching you, saying, learn these things, because that's the only things that market makers can't hide from you, which is volume profile, TPO, order flow, market profile, then you listen. There's a reason why a market maker is saying to learn these things if you want to become a good trader. Anything else is noise. EMAs, MACDs, moving averages. It's all noise. It's all lagging indicators that will get you into trades late. People that trade with me live, where was it? Here. No. Here. I'm so lost right now. Where am I? Today. Here. Yeah. So we were short here today. And for people that don't trade futures, that would be puts. So I called out short. I want to say it was 18,832. And the reason we called this out as a short, as we saw a big seller come in with 200 contracts on NQ, which is like absolutely massive. That's millions and millions of dollars. And so when you see one order for millions and millions of dollars, you follow them. And when I called out this short, my original price target was 811, or that was where I was exiting my trade. But I told people that we were probably going to 802, 806, 802. So I closed. I can't get this. Let me zoom in a little bit. I closed here. And just for reference, from 32 to here, I made $9,000. 806 was my next price target, and then 802 was my final price target. So when you learn to basically get in at the top and sell almost at the very bottom, you're making bank. And I called these levels out. I mean, I called this out as it was happening, and I said my exit was here, but price is probably going to hit 806 and 802. And all of these levels hit, obviously. I think a lot of people in the Discord made a lot of money. And then from here, you would switch to longs or to calls and play it up. I also called long, I don't remember exactly where, but right before right at the open. I think it was somewhere down around here. I called a long, and we played that up. But anyway, when you have a market maker teaching you how to play the market, you listen. And anything else is noise, and you shouldn't be listening to it. That's just my opinion, but that's how we trade. Sorry, just reading through the messages here. That's awesome, Michael. That's dope. I'm happy for you, bro. Yeah. Shorty is not in Keenan's, and he would never be in Keenan's. Like, no disrespect to Keenan's, it's just not something that he would do. Yeah, Shorty has his own Discord, and the whole focus of the Discord is education. I trade live there pretty much 5 days a week, and Shorty trades live a few days a week, like 2 to 3 days a week. Anyway, I think that's going to do it, everybody. Fallen Shorty student from 3 years ago. Is John in the Discord now or no? I don't know who that is. What? $1.99 a month? No. Shorty's Discord is not $1.99 a month. Shorty does not seem like he is a guru. He is a freaking wizard. Yeah, it's $1.99. Sorry, it's $99 a month or $100 a month. That's the link to the Patreon, but it's like, I don't really talk about the Discord too much, but if you are really serious about learning, that's the place to go. The Discord is super small. We don't try to have too many members join. Because it would just get too crazy, and our goal is to focus on teaching the people that are there. It's just heavily focused on education and also the mental game of trading. Like, without discipline and patience, you'll never be a good trader. Without not gambling, you will never be a good trader. Shorty's an amazing teacher. I'm pretty decent at teaching myself. Sorry, again, I'm having a brain fart. I don't know why. But the whole thing is just about teaching people how to become traders. This is like no BS. We literally just had a guy that cashed out 1.3 million. He's one of the students, or was a student. Now he's become a full-time trader. Yeah, we don't want a massive group. It would just become chaos, when you have a really large group, it's impossible to know people like on a personal level. It's impossible to know who they are as traders and as people. Like, most of the people in Shorty's Discord, I know them well enough to know where they're at in their trading journey and to know if they're profitable or not profitable, and to know how to help them move forward. Whereas in like pretty much any other Discord where there's thousands of people, I have like an idea of where a few people are at, but nothing like I do in Shorty's Discord where I know, no, not 3 million, 1.3. So the bigger Discords, I can't keep up with who's who and what's what. I do know that a lot of people flex like they're good traders, and they're not. You can tell, like, the writing's on the wall if you know what to look for. People that just share win after win after win after win are not profitable traders. People that are willing to go over their losses and are transparent and will show you, like, hey, like, I had 2 weeks in a row where I was green, and then on the 15th day, I lost XYZ amount of money. Those people are legit traders for the most part. But people that just breeze over their losses and don't talk about them, guarantee you they're not profitable. Because anybody that's a decent trader knows, like, you have to be a good loser. And so if you lose and then you start getting, revenge trading or YOLOing into plays or whatever else, is where you start blowing accounts. When you lose with grace and you're like, hey, I'm just playing probabilities and probabilities went against me, now I need to look for the next good setup and take a good, educated trade and play probabilities again. And then even if you get hit with a second loss, you still need to maintain that mental fortitude and continue pushing on, looking for good solid plays and just playing probabilities. And over time, if you do that consistently, probabilities will win out in your favor if you're, if you have a decent trading system. Yeah. Yes, $1.3 million. I can actually like show proof. Let me see. This is the all-time payouts for what is it? The top 16 payouts for Apex Trader funding, and you can see here, Bryce from California was paid out in March. Well, February 40,000, March 1.393480. This person, number 2, was paid out 1.412. I don't know who this person is. There is a second person on this list that I do know. It's this guy here. Wait, no, is it? Yeah. Grand total $500,000. So, there's the proof. Yeah. But anyway, I mean, really, trading. I don't want to go off on too long of a tangent, but really, trading is learning a system that works and sticking with it. And then being consistent and patient and waiting for good setups and not getting frustrated when you take a loss. One of the hardest things that I probably did trading, but that benefited me the most, was only taking one trade a day for 6 months. It forces you to wait for good setups because you only have one shot a day to take a trade. And then it teaches you like massive discipline. Once you've done one trade a day for 6 months, you become so disciplined that you don't have an urge to like YOLO into trades. You'll sit there and wait patiently for a good setup. So. Yeah. Robinhood, there's no way to answer that. Everybody's different. I know people that I have mentored personally that have gone from, well, there's one person that always comes to mind, probably because he did it the quickest that I've ever seen. And he's, when I met him, he was trading with EMAs and MAs and MACD and RSI and blah, 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 blah. And he was losing. He noticed that I seemed to know what I was talking about, and he hit me up and he asked me to mentor him. And I'm like, dude, like, it's not worth your money. I mean, like, it is, but it's not. Like, a mentorship, like a legit mentorship with a good profitable trader is going to cost you like 20 grand. If you have a lot of money, it's a good investment. But if you're struggling financially, it's, it would be very difficult, and it's very time consuming for both people, for the mentor and the mentee. So I was like, yeah, that's not really the way to go. You're way better off reading these books, and then I'll meet with you one-on-one. We'll talk about some stuff, and then I'll give you more stuff to study, and then we'll meet again, and then I'll give you more stuff to study. Instead of me just teaching you, like, you actually put in the time and read and learn, and then we'll cover what you've learned, one-on-one, and then you'll learn more, and then we'll cover that one-on-one, and you'll learn more. And then, anyway, he did that, and I think the most impressive thing about him was he has a full-time job. He works in some kind of a lab where he can't even take his cell phone in with him. Like, he has to put it in a locked box outside of his work. He's also in college full-time for a master's program, and he would stay up till like 3 o'clock in the morning studying for trading. I don't know where he found the time, really, but in 6 months, he went from MACD, RSI, whatever, BS, to being a very profitable trader based on volume profile, order flow. Yeah. And he still just crushes it every day, and he did it in 6 months. He's getting pretty close now at this point. I think he's been trading for, well, since I met him, about a year and a half now. And he's getting close to becoming a full-time trader and quitting his day job. Let's see. Do I get more percentage gains trading futures rather than something like SPY? That, it's hard to answer, because what's nice with futures, let's just say I'll just call them puts in this range, right? And if you did this on SPY, you took puts, all of this chopping sideways would kill your contract value. And then when this move finally happens, like, you're lucky if you're break even or slightly profitable, right? Futures don't have theta decay. So I can be in this chop all day, and then the move happens and I make my money. And it doesn't matter if I entered here or if I entered here, I'm going to make the same amount of money on the drop. So you don't have theta, you don't have Greeks. There's a lot of benefit to trading futures. It's taxed at a lower rate. There's no Greeks, so there's no theta decay. You don't need $25,000 for unlimited day trades. There's no wash sales. There's no, what's it called? The 3 trades per week or whatever. I forget that rule, what it's called, but that rule doesn't exist in futures. There's a ton of benefits to trading futures. The only thing that you don't get with futures is if you happen to buy like calls here on SPY, you would make more money than I would trading futures, because options pay you better if you catch the move like precisely. Whereas if I bought here and sold here and you bought here and sold here, you would make more in the same amount of time. But when I buy over here and you buy over here, I make the same amount of money and you lose money. So it's kind of hard to say. Aaron, I mean, if discipline's an issue, just do what I said. 1 trade a day for 6 months. That'll fix that. Michael, I mean, I don't like, for me, I trade key points on the chart, right? So I talked about the trade I took today where, and I'm just going to call them puts, but they're not puts. I took puts here. My price target was 811. And I bought them like on this first candle. So for whatever this is, 5, 10, 15, 20, 25, 30, 35, 40. For 40 minutes, I was just chopping sideways, up and down, up and down, up and down, up and down. And then the move finally happened. When this move happened, we started bouncing right around 14, 16. But my price target's 11. I'm not getting out early. Like, they could come back up and stop me out before I would close early. And I was pretty positive price was going to come to 506. 806, and then also 802. I was pretty positive on these levels, but I was good getting out here. Like I said, I made 9K. Of course, I could have made more, but this for me was a pretty, like, I don't want to say guaranteed because nothing's guaranteed in trading, but I was pretty sure we were coming to 811, and I knew that 806 and 802 were very, very possible. But this was the most possible, and so I just closed my full position there. But so I sat through all of this chop, right? And you want to trade based on key levels on the chart. It's kind of hard for me to show it in retrospect, but at the time, I had large delta nodes at 811, 806, and 802. Which is why I was targeting those levels. What was my point with this? Oh, so closing early. Let's just say my stop loss, my entry was 32, I want to say. Right about here. My take profit was 811 and 50 cents. I didn't mention that earlier, but that's the truth. It was 811.50. And my stop loss was right here, 43. Just shy of 2-to-1, but whatever. It is what it is. See, if I was a liar, I would just make this tighter to show it as 2-to-1 because that's what I always preach. But I'm not a liar. My stop loss was at 43. I'm okay with slightly less than 2-to-1, but generally, most of my trades, I'm looking for a minimum of 2-to-1. So if I had an issue with closing my positions early, and I've talked about this before on YouTubes, and I've talked about it in Discords, and you guys have probably already heard this, but you should be journaling every single one of your trades. And basically, if my plan was to sell at 811.50, but I started trailing my stop loss and I ended up getting hit, let's just say at 816.75, then I make one journal that shows the profit I actually made, and then I make a second journal that shows how much I would have made if I held to my price target. And this could be one of two things. Like, price could come all the way from my entry just shy of my take profit and then come back and stop me out, right? And so instead of winning whatever, we'll say $1,000, I end up losing 500. And because I was waiting for that 1 point more, I ended up taking a $500 loss, right? So you would document on your journal what you actually made closing early, what you would have made if you only either hit your stop loss or your take profit. In this case, it would have hit your take profit. You would have made your, the full amount you were trying to make. And if it did do this and came up and stopped you out, then you would journal how much you would have made if you waited for it to come to your take profit, but it didn't hit, and instead it ended up hitting your stop loss. And if you do this consistently, 2 separate journals, one of your actual trades, and one if you only followed your plan, and your plan is either your stop loss or your take profit, nothing in between, I'm pretty sure after like 2 weeks or a month of doing this, you'll get tired of closing your trades early and losing out on that profit. Because more often than not, it's probably going to hit your take profit and not run all the way back up and hit your stop loss. But I can't tell you how many times I've had something like this happen where my entries here, price will come down, it comes back up to here and then goes all the way through. And if I had trailed my stop loss at all, I would have got hit and I would have never made it to my profit target. And that's because stocks don't really move like this, right? Stocks move like this. So you have to accept your risk when you enter the trade and either hit your stop loss or your take profit. I see people that consider themselves like teachers talking about how they're trailing their stop loss, and it infuriates me because that is not how you trade. If you're, let's just say this is your take profit, and as price approaches your take profit, you move your take profit lower, and then you bring your stop loss down, like that's cool, whatever. But if you're not hitting your take profit because you're bringing your stop loss down, and then price comes back up and takes you out, you're not a trader. Just an FYI. Okay? Sorry, I'm just reading through messages right now. All three of the books that I recommend are amazing. Read Volume Price Analysis, read Volume Profile, and read Trading in the Zone. Hit me up for a one-on-one, and you will probably learn a lot in a very short time. There's no good faith violations in futures. You're saying good faith violations is the name. No, it's the PDT rule is the rule that I'm looking for. Pattern day trader. But yeah, if you took more than the 3 trades, it would be a good faith violation. Contract prices. Well, so John, like futures are pretty much all traded on margin. And like you can get one MES for like $50 of margin. So it's hard to answer your question because like one NQ is like $500 of margin. One MNQ, I forget how much it is. I think it's $50 as well. One ES is $500. One MES is $50. It's like a set price. So unlike options where price varies, you know. Robinhood. Ideal time to make the trade for you. If you... This has been working well. I like the initial balance. So, where is it? I know recently, is this initial balance? Yeah. Sorry. I don't know why it's not extending, but if you use the initial balance indicator on your chart for the first hour of the market open, normally, like during the day that you're trading, this box will extend to the right. So we cover this in my channel. There's a thing called the 88% rule, which basically says that if price breaks the initial balance high or the initial balance low, and you get 3 5-minute candles that close above or below this level, then we're not going to come back into this range. So then what does that mean as far as a trader? That means when you come back to the top of that range, you take calls or you take long if you're a future trader. I can't think of a better trade, right? So after the first hour of the market being open, you just wait for the initial balance to be set. And you can either draw it manually or you can use this indicator. But basically all it is you take the low of the first hour and the high of the first hour, and that's your initial balance. Um, and then if you happen to break above, like I said, have 3 5-minute candles close above and you retest it, that's where you would enter calls or you would enter long. If you break below, have 3 5-minute candles close below and you retest, you would enter short. On the inverse, so that's only if you break out of that range, right? That you would be taking the retest. If you don't break out of that range, like today, so you can see we had basically candles wick through this initial balance high, right? Boom, 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 boom. But we didn't have like 3 5-minute closes in a row. Or maybe we kind of did here, but this is not. This is closing above. Where is it? This is closing above. This is wicking through and sloppy, choppy yuckiness, right? And so then when we lose this, 88% chance that we're not going to break out of the initial balance. So then what do? When it retests here, you enter short or you take puts. I don't know how much clearer that can be, right? I don't know if you're noticing a trend, but everything, if I'm looking for a level to be broken, so like previous day value area high, I want 3 5-minute candles to close above, retest, I take long. On the inverse, if I break below, 3 5-minute candles, retest, short. Easy. So I just showed you, I mean, like, it just doesn't get any better, right? Like, there was a trade here, I think. Yeah. I know I noticed it on Monday or whatever. This was the initial balance. It was way down here, but like we failed to break out and hold for 3 5 minutes, right? So here when we peaked above it and came back in, you just boom, take puts, right? And then here, this would be a fake out. Like, so we broke above, had 3 5-minute candles close, come back, retest. This is where probabilities didn't work in our favor. And it is what it is. Like, you just, if you took this one trade here as a put or a short or whatever, you're good. But if you didn't get that trade and you tried to take a long or a call off of this bounce here, it wouldn't have worked out in your favor. And I'm more than happy to show this doesn't work 100% of the time, because there's no such thing as a system that works 100% of the time, right? So we're traders, we trade probabilities, and that's that. So in my opinion, that's the best way to trade. You wait for that first hour, the market to settle, to show you what the range is. If we break out from that range, you wait for a retest, you go long. If we break below that range, you wait for a retest, you go short. If we stay in that range, then you would either short the top or long the bottom. That's it. Maylove, I do not trade leaps, and I would recommend you switch to futures. I don't know, so like I don't know you personally, and don't take this personal, but I don't know too many people with a more hectic schedule than myself. Maybe you are the exception, but futures you can trade 23 hours a day. And I can generally find a trade within 5 to 15 minutes and take it and be done and out and call it a day. Excuse me. So that's what I would recommend as far as trading if you have a busy schedule. But like me personally, I have my 9-year-old that's homeschooled, and he's a very like high functioning child. His IQ is like 146. He's 9 years old. He does trigonometry, for example. He's supposed to be in fourth grade, and most of his classes are like at a ninth grade level, give or take. Some are 11th and 12th grade. So that takes up a lot of my time. And then that same child trains really hardcore MMA, and we spend about, I would just say on average, like 4 hours a day in the gym. And then I'm trading, I'm doing YouTube, whatever else. Like, I'm married, I have a wife. She needs my attention. My kid needs my attention. So I'm super busy, and I'm able to find time trading futures. And maybe that would be a solution for you. Again, you could be the exception, and if that's the case, then you've got to stick with the leaps. But I would rather buy stocks than buy leaps, just personally. I use 5 minutes, but for my time frame for trading. But the key is, I might be able to show you guys. I really am looking at delta. Monthly value areas, you just go to 4-hour chart and you go to PVP. Value area 68, row size 100, and you change this to 1 month. And then that will give you your monthly levels. So this is May developing here. You can see down here is April, right? So April high, POC low, or low's way down here, sorry, right there. So 4 hours, PVP, 1 month. That sound you just probably heard, I think, I don't know, is going to be my footprint charts. And so I can show you guys this. Whoa, don't do that. I can show you that 8. Where is it? So targeting 811, right? I have this massive delta node. My next target, this has changed since I chose it, but the 806 level looked like the 805 level. And so this was my second target. And then 802 you can see here is a massive delta node as well. And so that's why I was targeting boom, boom, boom. Okay. This I knew was going to be some resistance. And I think that's where we were bouncing. We were coming down, bouncing, coming down, bouncing, coming down, bouncing. And so this choppiness, wherever it was, 5 minutes. This choppiness here before that we got the dump was that level getting bounced off of. Right in here was getting bounced off of. And then once this broke, we bounced on this a little bit and then finally went to 811 pretty quickly after we lost this node. So that's all it is. So I'll say this really quickly. Like whenever I meet with people after they've read the 3 books, I always recommend, we go over the volume profile stuff, and then afterwards, I gotta get rid of these. I'm gonna be like, what are those green lines? And they are gonna throw me off. So after the 3 books, like next you want to study footprints and order flow. And I kind of just put people on game of what to study next. And so that's what I was showing, was that delta stuff is all footprints and order flow stuff. Let's see. Sorry, I'm just reading through Reading through the messages here. John Doe, literally, you don't need a margin account to trade futures. Every futures account is a margin account. If you do the I forget what it's called, like the notational value of NQ, I'll show you the math, okay? And you'll understand why everybody trades futures on a margin. Every 1 point is $50 on NQ. So you're doing 50 times the current price, which is 18,905. So you need just shy of $1 million for one NQ. So that's your NQ value. Notional value, I think it's called. So yeah, everybody that trades futures is on margin. No, 88% rule applies to anything. Options, futures, stocks. Doesn't matter. So Trayvon, I'm guessing. You're talking about two different rules. The 88% rule, and then there's an 80% rule. They're two different things. But they both do apply to futures, options, stocks. It doesn't matter. Sorry, I've got like a DM on. Hi, Nikki. For future reference, it would be way easier if you just type into YouTube, but sorry, I'm trying to read this. I'm in your YouTube at the moment as you're going over today's trade. Do you live trade on YouTube every day? I do not even live trade on YouTube. If you go to my channel, God, and it would be like really hard to find. Let me see. Where is it? So if you go to my channel on YouTube and go to lives, like you could scroll down for quite a while and you might see some live trades. So like right here on 12/18. If you want to watch me live trade, you can watch this video. And there are a few other ones, but I trade live in my Mentors Discord, which is Shorty. And if you're interested in that, the link is in the description of this video. But you can, like, every once in a blue moon, I'll trade live on YouTube. I don't do it very often because there's a delay. And I don't really want people following me with a delay. So I trade live 5 days a week for the most part on my Mentors Discord. And I just trade futures. Yes, micros are 1/10 of a regular E-mini. No, you do not need $1 million. John, it's the margin for the micros is $50, and the margin for the E-mini is $500, and you just need that much to trade each one, basically. All right, I'm gonna call it a day here. I think I'm probably in trouble at this point. Anyway, I mean, I think this was a pretty informative live, so hopefully you guys got a lot out of it. And hopefully we bank some of these plays. So right now, I'll just go over it really quick. We're still watching Disney over 106. Still watching GME over 2360. CAT, we're looking for a short, or for put, sorry, below 150-140. Google, we're looking for calls over 178. And Netflix calls over 643. I'm gonna save this. and I will see you guys in the next one, okay? Much love. Have a good day. Take care, everybody. Bye.